Brexit update here, where JP Morgan have left their probability on Brexit on the terms of the current withdrawal agreement unchanged at 45%. So in just about 10 minutes, we will see the release of German CPI figures, which will be coming out at the top of the hour. So just taking a look back at the regional figures that we saw throughout the day, the general trend has been in a pickup and a larger pickup in the month-on-month compared to the small pickup that we've seen on the year-on-years. So just going through the expectations for the CPI figures from Germany. The month-on-month prelim figure, non-harmonized, is forecast at positive 0.5 versus the previous negative 0.8. And the harmonized month-on-month as forecast at positive 0.6 versus the previous negative 1%. And in a year-on-year stance, the unharmonized, so the non-harmonized figure, is forecast at 1.5% versus a previous 1.4, with the harmonized forecast at 1.7% in line with the previous. We'll also be awaiting some comments at the same time from Fed's Clarida, who is a voter and neutral, who will be speaking on, quote, a view for the Federal Reserve Board. So just about a minute now until those German CPI figures. So just to remind you of the general bias, we're looking for an increase in both the year-on-year and month-on-month, with a more marked increase in the month-on-month as based by the regional figures that we saw earlier in the day. So just about a minute now until those German CPI figures. So just to remind you of the general bias, we're looking for an increase in both the year-on-year and month-on-month, with a more marked increase in the month-on-month as based by the regional figures that we saw earlier in the day. Ten seconds. So just about a minute now until those German CPI figures. So just to remind you of the general bias, we're looking for an increase in both the year-on-year and month-on-month, with a more marked increase in the month-on-month as based by the regional figures that we saw earlier in the day. Ten seconds. So just about a minute now until those German CPI figures. So just to remind you of the general bias, results from Germany. We're just noting comments from Fed's Clarida, who said that the Fed is entering an era when it is especially dependent on economic data, on incoming economic data, whilst going on to say that inflation expectations are at the lower end of the range and consistent with the Fed meeting its 2% inflation target. 10 seconds. So the German CPI prelim month-on-month, that's at 0.5%, in line with the forecast, with the harmonized month-on-month below forecast 0.5 versus the forecast 0.6, and the year-on-year non-harmonized, that's at 1.6%, marginally above the forecast of 1.5, with the harmonized year-on-year in line with forecast at 1.7%. Whilst going on to say that inflation expectations are at the lower end of the range and consistent with the Fed meeting its 2% inflation target. 10 seconds. So the German CPI prelim month-on-month, that's at 0.5%, in line with the forecast, with the harmonized month-on-month below forecast 0.5 versus the forecast 0.6, and the year-on-year non-harmonized, that's at 1.6%, marginally above the forecast of 1.5, with the harmonized year-on-year in line with forecast at 1.7%. Whilst going on to say that inflation expectations are at the lower end of the range and consistent with the Fed meeting its 2% inflation target. 10 seconds. So the German CPI prelim month-on-month, that's at 0.5%, in line with the forecast, with the harmonized month-on-month below forecast 0.5 versus the forecast 0.6, and the year-on-year non-harmonized, that's at 1.6%, marginally above the forecast of 1.5, with the harmonized year-on-year in line with forecast at 1.7%. Whilst going on to say that inflation expectations are at the lower end of the range and consistent with the Fed meeting its 2% inflation target. 10 seconds. So the German CPI prelim month-on-month, that's at 0.5%, in line with the forecast, with the harmonized month-on-month below forecast 0.5 versus the forecast 0.6, and the year-on-year non-harmonized, that's at 1.6%, marginally above the forecast of 1.5, with the harmonized year-on-year in line with forecast at 1.7%. Whilst going on to say that inflation expectations are at the lower end of the range, consistent with the Fed meeting its 2% inflation target. 10 seconds. So the German CPI prelim month-on-month, that's at 0.5%, in line with the forecast. Just having gone through 1 o'clock London time, that draws the start of my usual rundown. So starting off in Asia, where stocks were mixed following a similar lead from Wall Street, wherein the Dow and S&P fell for a second consecutive day, as investors digested key testimonies from US Trade Representative Lighthizer and Fed Chair Powell. And additionally to this, Chinese manufacturing PMI came in at 49.2 versus the expected 49.5, just the third consecutive month of contraction. That draws the start of my usual rundown. So no agreement has been reached between US President Trump and North Korean leader Kim Jong-un, but they look forward to a meeting in the future, as according to the White House. The two leaders discussed various ways of advancing denuclearization and economic-driven concepts, with the White House adding that the meetings were very good and constructive. President Trump stated that they had a really productive time and that they had some options but decided not to take them. North Korea wanted the sanctions entirely lifted, but this could not be done. And Trump added that he would walk away from a deal with China if it did not work out. So the Shanghai Comp and Hang Seng both closed lower by 0.4% and initially traded choppy, although the latter recovered somewhat from opening losses as pharma and finance stocks led the gains. And the ASX 200 closed up by 0.3% and was kept afloat by its pharma and energy names. So in Japan, the BOJ board member Suzuki said that it's important for the BOJ to maintain powerful monetary easing, but there is no need to ease further. And the BOJ does not intend to raise rates now, but will act swiftly through market operations if yields rise sharply. And the ASX 200 closed up by 0.3% and was kept afloat by its pharma and energy names. Also moving on to updates that we've just seen from Politico, we're just making a comment on enforcement structures for China. They say that it's still unclear whether Chinese President Xi Jinping will ultimately agree to them. So a deal could still fail, but the senior administration told Politico that if President Xi accedes to what his negotiators have put on paper, then there will likely be a signing event at Mar-a-Lago at the end of March. Furthermore, Morning Money have been told by a senior administration official that there is not much tension between Lighthizer and Trump if they speak nearly every day. So now on to updates from the UK, where House of Commons leader Leadsom said that if they can bring the meaningful vote back to Parliament before March 12th, they will. We did, however, see some updates from Tom Newton-Dunn of The Sun saying that this event is unlikely. Furthermore, so on to updates in equities, which are currently flat in Europe after opening slightly lower, as risk sentiment deteriorated following geopolitical updates. And as I'm doing this rundown, US equity futures are indicating a negative open of about 0.2%. And in the pre-market, we saw earnings from JD.com, who beat on their top and bottom line. So in FX, euro-dollar has now firmly breached the 114 level to the upside, and for reference, the current high is 114.18, after surpassing both their 50 and 100 DMAs. And looking ahead of that, we've also got the 114.41 prior. And prior to this, rather, we have 114.20, which is offering some resistance. And of note, there's some moderate rebalancing sell signals for the buck, which are said to be strongest against the euro. For the pound, it's had a relatively strong Brexit-led bid in the morning, but has come off in recent trade. And some Q4 very strong GDP data from Sweden has seen the Eurosec dip from about 10.55 pre-release to trade around 10.49 post-release. We're currently trading around 10.48. So into fixed income. In contrast to yesterday and other sessions of late, it appears that bonds have been calling the tune after topping out just ahead of 166 and resistance just above the big figure. There was also a rebound in BTPs after the EU deferred excess deficit proceedings pending a response to a request to revise the 2019 budget. And US Treasuries are also keeping the heads marginally above the water, with the curve unwinding a degree of post-Fed chair and supply-induced steepening ahead of a busy end-of-month agenda. And finishing off in commodities, Brent and WTI prices are marginally negative, but trading within a very narrow range today, as risk sentiment is hampered following no agreement between the US and North Korea, alongside Chinese manufacturing PMI printing the third consecutive month of contraction. So looking ahead, the highlights include US GDP, Chicago PMI, Fed's Bostich, Harker and Kaplan. The Baltic Dry Index, that's up 1.1% to 658. That's the Baltic Dry Index up 1.1% to 658. And we're also noting updates from Secretary of State Pompeo, who has said the US continues to be very engaged with India and Pakistan and has spoken to leaders of both countries, while saying that he's hopeful that the US can take down tensions between India and Pakistan for the time being to avoid the risk of escalation.
Brexit-related news here from EU's Barnier says now is the time for British lawmakers to face their responsibilities. More here from the EU's Barnier. We are ready to be as ambitious as Britain wants to be. EU's Barnier says EU ready to be as ambitious as the UK would like it to be. Just note that the Fed's Clarida now answering moderator questions, and he says financial conditions could help the Fed forecast the economy. And he's once again just repeating, Fed can afford to be patient. EU's Brexit negotiator Barnier just repeating what the EU has said many, many times, will not change the Irish backstop or reopen the withdrawal agreement. So he's just reiterating the EU's line here. They will not be reopening the Irish backstop or the withdrawal agreement. Again, just repeating what we already know here from the Brexit negotiator for the EU. He says extension of Brexit negotiating period is possible, but it raises the question, quote, what for? So Barnier seems to be taking a more French line over here. The French have tended to be a bit more sceptical about this extension, whereas the Germans and many other EU lawmakers seem to be in favour of that extension. Barnier here, extension of Brexit negotiating possible, but that raises the question, what for? And Barnier just speculating about the length of the potential Article 50 extension. He says the duration of any extension will be related to the question what for could last up to the EU elections. It could last up to the EU elections. Just for your reference, those are on the 23rd May. We have around 10 minutes now to the bottom of the hour. We get quite a bit of data from North America. Focus will be on the GDP data from the States. That is Q4 data. Headline expected to come in at 2.6% Q on Q in Q4. That's versus 3.4% prior. For the PCE prices, 1.6% expected. That would be unchanged from the prior. Core PCE seen at 1.6, matching the prior as well. No forecast for the corporate profits. Prior was at 3.5%. And the price index, 1.7% expected, rising from 1.5. Initial jobless claims data seen coming in at 221,000 this week from 216,000 prior. Just in case you follow it, last week the 4-week moving average stood at 235,750. Continuing claims this week seen ticking up to 1.733 million from 1.725. We'll be getting some data from calendar. We're getting the IPPI for Jan. Month on month expected at 0.3, bouncing back from negative 0.7. And the raw materials price index month on month seen at 4.1%. That's versus a prior 3.8. But just for the sake of clarity, because there is quite a few data points, we will lead with the GDP data from the US. Once we've done that and the components, we'll have a look at the initial jobless claims. And once that's out of the way, we'll take a look at that CAD data. And Barnier here, just with slightly negative twist, he does not feel the need to spend much more time on the clarification that the UK wants. As EU Brexit negotiator Barnier, he does not feel we need to spend the time much more on clarifications that the UK wants. And a bit more here from the Fed's Clouder. He's talking wages. He says wage gains are in line with underlying inflation trends and productivity. Quote, no real evidence of cost push pressures. As Fed's Clouder, voter, wage gains in line with underlying inflation trends and productivity. And he suggests that there's no real evidence of cost push pressures. So 1 minute now until we get this data from North America. Just a reminder, we will lead with the GDP Q on Q for Q4. Headline expected at 2.6% versus 3.4. Then have a look at the components, starting off with the PCE prices and core PCE. They're expected to stay at 1.6%. Then we'll have a look at the weekly claims data, and then we'll have a look at that CAD current account and CAD RMPI and IPPI. Ten seconds. That's 2.6% in line, 2.6% in line. Still waiting for the PCE price index at 2% against 1.7% expected. Waiting for a lot of this breakdown. Initial jobless claims 225,000 above the 221 forecast. Continuing claims 1.8 million. We had expected 1.733. Real consumer spending in the US 2.8% from a prior 4%. That's Q4 data. 2.8% for the real consumer spending from a prior 4%. 1.5% for the PCE prices against 1.6 expected, and core 1.7% rising from 1.6. Deflator at 2%. Just looking at that CAD data, current account deficit 15.5 billion against an expected 13.5. For that GDP headline, some calendars had looked for a 2.3% reading, saw 2.6%, prior 3.4. Worth reiterating those PCE prices 1.5% against 1.6 expected, but the core rises to 1.7% from 1.6. Fed's Clouder talking inflation here. The Fed wants to be very, very clear. Upcoming framework review will not alter the 2% inflation target, and that follows last week's study where a number of Fed officials were talking about future inflation targeting frameworks, and he's just clarifying those comments, saying Fed wants to be clear. Upcoming framework review will not alter 2% inflation goal. Just be aware of geopolitical reports here. According to headlines, India shot down one F-16 belonging to Pakistan, according to its Air Force. So India shot down one F-16 belonging to Pakistan, according to its Air Force. Just be aware, it's just a headline crossing. I don't have any other details in terms of whether this is a current situation or referring to something that happened earlier. Desk is looking into the details of India shooting down one F-16 belonging to Pakistan, according to the Air Force. Headlines crossing, but it's not clear if it's a current situation or it's referring to an earlier situation. Just looking into the details of this, we speculate that this is the one from yesterday, and the Air Force just confirming some of that today. Again, it does seem in sync with some of those reports that we got yesterday, but just be aware the headline dropped a couple of minutes ago.
Just noting some comments from an Indian defense official, just stating that Indian Navy is in a high state of readiness. And goes on to state they are prepared to defeat Pakistan's misadventure in the sea.